Mute. Oh my God. But all right. So welcome back to episode 10 of Dear Mom, the series, bro, where I just break down my trading to my mother, just in case as a trader we want to grow and aspire to like take care of our people and maintain for them and bring us all the fruits of our labor. Right. Obviously, if you're into trading, you can honestly understand and probably comprehend that um so much opportunity is in there for growth and you master your own craft and stick to it and you submit your time into your learning and you manage your emotions, follow risk management, and respect your risk, you're Gucci. Like you can do a lot of things. I know a lot of traders are killing it, but we're also fucking killing it. So coming into today FOMC meeting, we've been waiting for this meeting since September. Just because we know they're gonna raise rates, I was really wasn't surprised when I see another 75 basis points. It was between 75 or 50 because I know they want to keep it at 4.4 to 4.6 by next meeting, some shit like that. It's at 4% now. So let's see, maybe next Fed meeting, it's a 4.75. That'd be nice. That'd be shocking. But going into Christmas break, sucks for the people that are holding 401ks. It's just going to zero. But so coming into today, let's zoom in, right? So it's FOMC, right? Where's the focus? Where's the draw? We're getting that reaction from the order block right here. If you guys were watching this morning, this was a bullish candle in the beginning, right? Looking at the H1, it's still the 98,500 area. Let's just put it like that. Highs must be rejected. If so, we are favoring sells, waiting for the H1 order block to touch and see a reaction. If so, submit to your model and trade safe. Don't push it. You have a session for a reason. And then update. I looked at it, and we're gonna go into it right now on the H1. Yes, those two H1 candles would make the OP since the bull candle took both of them. So our model should show they can run the highs, just wait for the sell model. That's it. So coming into here, we had this low here, right? Outlook, which is 98,071, pretty much. And the 98,500 was the draw on liquidity, where I was expecting it to smack a doo-doo-doo underneath here, actually. Pretty much unload. I wanted them to unload positions there. So let's go drop to the H1. It'll be clear on the H1. So coming into, we have the highs getting respected, right? Previous day's high, previous day's low, sell side liquidity coming today. We see how we're just climbing, and then right, we still in a fair value gap. Boom. And then I had this as a breaker, pretty much. I'm sorry, not a breaker. A mitigation block. The last down close candle before the push higher. So I would look for a position there. But we ran this liquidity and you can see we just tanked from there on out, ultimately taking out sell side liquidity here and then making our way down to unloading here, the 98,489 area. Of course, it went deeper than that. The 071 would be this one, right? So they unloaded this one, and you can see it all happen at 2 p.m., right, when the chairman raised the interest rate by 75 basis points. And you can see they took liquidity here, they took people out here. And no, if you're following me on Instagram at Phenom Capital, you can see how I mentioned yesterday the fact that Monday's high was too clean for it to be the high of the week, if that makes sense, right? Just because look at these two equal highs right here. And that was Monday's high, this was Tuesday's high. And so coming into it, I was like, okay, that's a nice little draw on liquidity. And we also had that Fed Powell moved the market up, took them, and then eventually delivered price under here. Now, interest rates are a bad thing, pretty much. So after the sell-off happened, that's a weak, it was supposed to be a weak dollar, but you can see how it only lasted that first part of the movement, and then when it came right back down. So we are still selling, but I'm not opposed on seeing buying momentum tomorrow. Possibly fill in some of this wick. Again, it doesn't have to, but so I mean, we'll find out tomorrow morning around 8:30. I don't think we have news tomorrow, so if we do, let me check real quick. We have 10 a.m. news, actually, PMI, and we have non-farm payroll on Friday. So interesting week. But yeah, that was the play. We did take a position here. Just break down the entry real quick. So you can see how we created imbalance there, imbalance here, and imbalance here. Now, which one's the one we go to? So at first, when this one touched here, I didn't take it. It gave the bearish candle, and then you had the 1, 2, the third candle. So then I'm like, okay, fourth candle should expand lower, creating the swing high. And then we use basically this order block to get the entry. So we got in at 10:10. As soon as it touched it, stop loss was above there, 8 pips, and we gradually closed out at sell side liquidity when it smacked it for a 102 return. We wanted the 98,500 area, of course, but I knew it was FOMC, and so I just wanted a quick in and out. And so as soon as it delivered, I unloaded, and then I unloaded again, and then I ultimately brought my stop loss above here, took me out, pulled back into the order block, continued drilling, and then before FOMC, you can see how it just spiked it all up, right? Took sell side one more time, then just dropped it like it's motherfucking hot, and then there's eventually you could take an entry here if you wanted that confirm, stop loss above here. But again, that's so deep into the session, which I'm done by here. So respect your session, right? One model, one setup. And yeah, so Mom, I'm about to go pick you up actually. You're coming back from France, Spain, and Italy. So catch y'all tomorrow. Stay safe.